Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Thursday, 18th September. Coming up on the show, the Fed cuts rates as expected and signals there's more to come. China drops its Google antitrust probe as trade talks between Washington and Beijing intensify. And Meta unveils its new AI-powered smart glasses. CEO Mark Zuckerberg makes some interesting claims about what they can actually do. So grab your coffee and let's own the morning. Well, we kick off with another tech firm impacted by US-China trade talks, this time in a positive way. China is ending an antitrust probe into Google. This all comes as trade talks between Beijing and Washington are ramping up, with TikTok and Nvidia's business in China getting caught in the crosshairs. Google's parent Alphabet shares are up in pre-market. The investigation into Google started back in February and centered on the dominance of Google's Android operating system, which most Chinese phone makers use. China's move suggests that Beijing is focusing its regulatory firepower on Nvidia as part of its leverage in talks with the US. Okay, next up, Donald Trump's state visit to the UK continues. Some titans of US industry accompanied the president at last night's dinner. Apple's Tim Cook, Nvidia's Jensen Huang and OpenAI's Sam Altman among those in attendance. Well, after all the pomp and pageantry and some big investment announcements, it's time to get down to more trade talks. The president is meeting PM Keir Starmer. High up on the agenda will be the finalisation of the UK-US trade deal. There's also the contentious issue of 25% tariffs on British steel and aluminium. The UK wants that number down to zero. Now remember, this state visit has yielded $204 billion of inward investment into the UK. Finally, time to talk about the Fed. No surprise that rates were cut yesterday, the first time this year. It was a unified Fed board in the main. All voted for a 25 basis point cut, except for President Trump's pick, Stephen Myron. He voted for a jumbo 50 basis point cut. The much-watched quarterly dot plot showed that policymakers are predicting another 2 cuts this year. Well, before we delve into the fallout from that Fed decision, it's worth noting there's more data out today that's definitely worth watching. Here's my colleague, Josh Lipton, with more.
Time now for to watch Thursday, September 18th. We're going to start off on the earnings front. We're going to be getting a new batch of reports on Thursday from Darden Restaurants, FedEx, and Lennar. FedEx announced results for the first quarter after the markets close. Analysts expecting FedEx to face pressure from new tariffs and the end of duty-free small packages known as the de minimis exemption. China making up about 60% of the 1.36 billion de minimis packages FedEx shipped into the U.S. last year. And taking a look at the labor market, we're going to be getting another key piece of jobs data on Thursday with initial jobless claims. Economists forecast that number to fall compared to the week prior to 240,000, signaling that layoffs slowed and fewer people filed for unemployment benefits. And moving over to housing, weekly mortgage rate data from Freddie Mac coming out on Thursday. 30-year fixed mortgage rate falling to 6.35% in the last reading, the lowest rate since October 2024. Another drop on Thursday would make it 5 straight weeks of declines.
Well, let's delve deeper into that Fed rate cut decision yesterday. Well, to do that, I'm joined by economist Lauren Saidel-Baker from ITR Economics. Lauren, thanks so much for joining us on Market Sunrise. Let's start with your reaction to that Fed cut. It wasn't a surprise. What did you though make of what Jerome Powell had to say on not just a weak labour market, but also about the threat of inflation going forward?
Yes, this is an individual in a pretty tough position right now. So no surprise, 25 basis points, that was largely expected, but the balancing act is very much in Chair Powell's focus. On the one hand, we're talking about cracks forming in the labor market. I like to remind, especially my clients, that labor market is starting from such an incredibly tight position. There are going to be some cracks. So to see this path of travel is not completely surprising. And inflation, I think that is the storm on the horizon. We at ITR Economics have been forecasting higher inflation. We're seeing more and more Fed officials starting to be not worried, but be concerned about those inflationary pressures that are building. It's not just tariffs, it's more broad-based and more fundamental. So I think we'll see more and more of that come through in commentary.
Things that also came out yesterday was the fact that the Fed now well, policymakers there now expect 2 more cuts this year, so the next 2 meetings. Before that, we were just expecting 2 cuts for the whole of 2025. Why do you think they're now feeling like they could cut more rapidly?
At this moment, and this is changing so quickly, I do like to remind everyone, but at this moment in time, the focus is very clearly on the labor market side of that dual mandate. Now, the expectations and the dots plot, which we watch so closely, it's becoming slightly elongated. There's much less consensus. So while more officials rather than fewer are seeming to shift toward that more dovish policy, this is not unanimous across the board. We didn't see any hard dissents on the upside, but we are starting to see a few folks that say stay put, even though the kind of largest cluster of those dots, so to speak, is drifting lower.
He voted for a 50 basis point cut. He's obviously feeling a lot more dovish than other members. But are you worried about the independence of the Fed, seeing as he is President Trump's pick, and President Trump also is looking to oust Lisa Cook as well?
Worried, no, but something we're watching very closely. I never thought in my job as an economist I would be following Supreme Court precedent, but here we are. Lisa Cook is something of a test case to see if President Trump can remove Fed officials. Currently, existing Supreme Court precedent is that he does not have that authority. We would be very concerned if he did, because any politician, any president, red or blue, Republican or Democrat, their focus is on short-term growth, doing everything they can for the more immediate term, whereas Fed officials, by definition, need to be looking longer term. So that would be a real risk, I think, to Fed independence and also to their credibility overall.
Lauren Saidel-Baker from ITR Economics, many thanks for your thoughts.
Thank
Okay,
you.
it's time for a short break, but when we're back, we'll be looking at Meta's big launch, and our tech editor, Dan Howley, has a closer look at Apple's new iPhones. Welcome back to Market Sunrise. Well, the Meta Connect event is underway in Menlo Park, and yesterday we got our first look at Meta's new Ray-Ban display smart glasses. It looks a lot like dystopian science fiction. Each pair comes with a neural band, a wristband that reads subtle fingers and wrist movements and turns them into commands, letting you control your glasses, get directions, and even translate conversations without pulling out your phone. Well, stock. Let's have a look at the stock. It isn't moving much right now, the Meta shares, but the glasses and the band, well, they'll retail for about $799 and ship in the US on September 30th. Take a look at this clip from Zuckerberg's demo.
This is Meta Ray-Ban display. These are glasses with the classic style that you'd expect from Ray-Ban, but they're the first AI glasses with a high-resolution display and a whole new way to interact with them, the Meta Neural Band. The display is large enough to watch a video or read a thread of messages. It appears in one eye, it's slightly off-center so it doesn't block your view, and it disappears after a few seconds when it's not in use so it doesn't distract you. So for the glasses, we're replacing the keyboard, mouse, touchscreen, buttons, dials, with the ability to send signals from your brain with little muscle movements that the neural band will pick up so you can silently control your glasses with barely perceptible movements.
Well, if like me, you are in the market to buy a new phone, you may be looking at Apple's new iPhone lineup. Presented last week, Yahoo Finance's tech editor Dan Howley spent some time testing the devices. Here's what you need to know before you make a decision.
The next generation of Apple iPhones are here. They include the iPhone Air, as well as the standard iPhone 17 and iPhone 17 Pros. It's been about 8 years since Apple launched the iPhone X in 2017, and since then, the design of its big-time phones have kind of stagnated. Sure, they've updated the inside with new chips and made the cameras better, but really the look and feel of the phones has remained mostly the same. until now. There's a ton of big deal changes to this, but there are also a few trade-offs. So let's go through them. This is the iPhone Air. It is the latest iPhone, new design, incredibly thin at 5.6 millimeters and incredibly lightweight. Now, I know those numbers might not sound big, but when you hold them next to something like the iPhone Pro Max, it really does feel like a different kind of device. Inside, the phone has Apple's new A19 Pro processor. Basically, it's the latest version of the chip that runs in all iPhones. The Air, unlike the Pro or the standard iPhone 17, has just one rear lens. So it's not as though that's bad, but if you're the type of person that really likes to get a macro shot or really zoom in, that could be a deal breaker for you. On the 17, we have a standard zoom as well as an ultra wide, and then on the 17 Pro Max, we have a new 8x telephoto zoom, which is the furthest that Apple's offered so far. And then up front, they have what's called a new center stage camera. Now, the big deal here is that unlike prior versions of the front-facing selfie camera on the iPhone, where you had to kind of turn it sideways to get a vertical view, or rather a horizontal view, this does it automatically. So you can just press a button and it'll immediately turn to landscape. It's got a good, decent amount of battery life, but the problem is that the 17 and 17 Pro also get big updates for their battery life. And they're going to last with the 17 Pro Max up to about 39 hours. One of the other things that I think is worth pointing out is all of these phones now come with Apple's iOS 26 and their new liquid glass design. Finally, pricing. Let's talk about that. The standard 17, that starts at $799 still. No difference, but you do get 256 gigabytes of memory, up from 128. The Air, that starts at $999. So not exactly going to break the bank for a new design. Very cool to see that. It's slightly more expensive, though, than the Plus was, which the Air replaces. The Pros, though, get a little bit more expensive at the start. Instead of $999, it's now $1099 for the base Pro and $1199 for the Pro Max. So not as much change as far as the pricing goes overall, but it's definitely something to keep in mind. From my experience, I really like the Air. I think the photo quality is great. I thought the battery life was great, especially compared to last year. Basically about the same performance. So overall, it's a big moment for Apple. They're finally changing the design of the iPhone. And if they follow the same pattern that Samsung did, they released a super thin phone and then released a super thin foldable. There have been rumors for a long time that Apple's working on a foldable, and it just released its first super thin phone. So now we just have to see if there's a foldable in Apple's future.
Okay, time for a quick break. Please don't rush off and get your new iPhone or your new pair of smart glasses, because we'll be right back shortly to tell you which stocks you need to watch today. First up, it's Nvidia, and shares are bouncing back after dipping in yesterday's trade. The swings are linked to trade negotiations, some big headlines. So let's recap. Yesterday, Nvidia found itself in the crosshairs of US-China negotiations when Chinese authorities essentially blocked sales of Nvidia processors to big Chinese tech companies. The CEO of Nvidia, Jensen Huang, said he's disappointed, but he understands the geopolitical backdrop and competition is getting more heated. Just today, Chinese giant Huawei unveiled a new chip cluster to challenge the American market leader. Today, analysts are still cautiously optimistic that Nvidia will deliver on its sky-high growth projections in the long term. And importantly, the Fed rate cut is driving stocks higher overall. And we've just had some breaking news on Nvidia. It's said to invest up to $5 billion into struggling chipmaker Intel. That's just broken in the last few moments. Okay, next up, it's Ionic. The quantum computing company stock remains hot. IonQ, sorry. The quantum computing company stock remains hot, up about 6% this morning, near 5% up near $68.70, as you can see there, pushed up by a series of catalysts. This week, the firm secured final UK regulatory approval for its $1 billion acquisition of Oxford Ionics. That news extended a new rally that began at its 2025 Analyst Day, where IonQ unveiled a roadmap to build a powerful quantum qubit system and announced its IonQ Federal Division to serve US government customers. Analysts at Needham and Cantor Fitzgerald raised price targets to $60 to $80, but keep in mind it's been a very volatile stock this year, with more than 100 moves greater than 5%. Very quickly, let's take a look at how Lyft is doing this morning. The ride-hailing company closed over 13% down higher, last night, and was up another 2.4% this morning in pre-market, now down up just 1.4%. Now, it's pulled back a bit, as you can see there. Investors are bullish after the ride-hailing company announced a partnership with Waymo, that's Alphabet's autonomous vehicle unit. The partnership triggered a raise in price targets and plenty of optimism. Finally, Novo Nordisk, the maker of Ozempic and Wegovy. The news is that shares in Copenhagen are up pretty sharply, up nearly 7% now this morning. And these days, seeing any green at all is a big win for the Danish drug maker. If we can pull up the chart, I want to show you just how dreadful the past 6 months have been. But today, there might be some light at the end of the tunnel. Overnight, the company delivered positive results for its new obesity drug. The Oasis 4 Phase 3 trial showed that a once-daily pill delivered a weight loss of between 16.6 and 20%. It's a big step in Novo's push to offer a more convenient pill. But of course, big challenges remain with competition from Eli Lilly and internal restructuring under a new CEO. Okay, time to hear from a CEO who's just pulled off a much anticipated IPO. Let's take a look at this new ticker that just hit the New York Stock Exchange yesterday. Stub had a bit of a difficult start there. It's again in the red after closing down over 6% on its first day of trading. Julie Hyman spoke with StubHub CEO and serial entrepreneur Eric Baker just ahead of Stub's debut.
It has been quite a journey. We've been doing this for a long time. Started StubHub originally back in 2000 to try and revolutionize the ticket resale market and give people an easy, convenient way to buy and access tickets. And in sort of going through that process, as you mentioned, bought StubHub back from eBay just a few years ago. And when we did that, we took on debt. And so today's transaction is really about delevering, lets us pay back that debt, clean up our balance sheet. And it's also just a great way for our businesses to move into the next phase to further raise our profile with partners, with consumers, and to attract great talent.
So what does that path look like, that raising the profile? What are the goals here? You guys, most of your business right now is in the US. Is that about international expansion? Is it about types of events? How are you thinking through that?
Sure. So we have a global business on one platform. As you say, the U.S. is maybe 85% of that business. What we're really excited about, Julie, is we have this vision that we call direct issuance, which is that we believe consumers don't care about primary or secondary tickets. They just want to get access to the tickets they want in an easy, convenient way. And so our opportunity is now to have all tickets flow over the platform, so it's easier for them to buy. And we're already doing things like that with great partners like the New York Yankees and Major League Baseball.
They want easy tickets, but they also want a good value, right? And I think that is where the real congestion and conflict has been in the ticketing industry, as you well know, whether it's primary ticket agents like Ticketmaster, whether it's secondary markets like StubHub. We've seen some legislators step in. In Maine, for example, a recent piece of legislation said you couldn't sell tickets for more than 10% over face. How do you deal with those kinds of obstacles?
Yeah, I think you're referring to something that may have been one of the states, but the real focus, Julie, is people want to make it easier, more transparent in pricing for people to get access to tickets in the first place. And a lot of that's broken with what's traditionally called the primary ticketing market. As you may know, oftentimes you have to get up at 2 in the morning, go to a queue in a random place and hope that someone has something accessible for you to buy. And so a lot of what we're trying to do through direct issuance is to open up that market and make different distribution outlets compete so that you make sure that the service that's providing the best experience for the customer is going to be the service that prevails. And that's the world that we want, and we understand why fans and consumers want that as well.
Okay, let's get back to that Fed rate cut. And it was obviously good news for anyone with a mortgage. In fact, mortgage rates are at their lowest since 2024. Well, Lawrence Young from the National Association of Realtors spoke to Julie Hyman about what this could mean for your mortgage rate.
I think the question is how many additional rounds of rate cut in the upcoming months. In my view, at least through this year, it could be 2 or 3 additional, and then next year even more. So we are looking at downward cycle in interest rate market condition. This is a great news for potential home buyers who have been priced out, but now with lower rates, their purchasing power increases, and we expect more buyers to begin to knock on the door.
But are we going to see any movement on price, Lawrence? Because that too, forget about the mortgage for a minute. The actual price of homes have also been an obstacle.
So the home prices have been in a spectacular increase from 5 years ago. Compare now with pre-COVID condition, many markets seeing about 50-60% price appreciation, and it has really not come down in many markets. We have seen some markets like Florida and Texas, additional inventory, some price adjustment in those areas. People should view it as a second chance opportunity to get in, given the strong job creation in those states. But what we anticipate is that with the income rising roughly 4%, if home prices can rise below that level, it will be healthy development. But this morning's housing permits data, which is a lowest in a year, that's not a good sign. That means we could face housing shortage again. So we need to ensure there's an adequate supply once the buyers come into the market. Any unnecessary obstacle to building more homes, those need to be removed because we need more supply to match up with the anticipated rising demand.
Well, we're almost out of time, but just a quick market check and one stock to keep an eye on in the coming days. Disney. We're watching this after Jimmy Kimmel was suspended by the ABC network over his remarks on the Charlie Kirk shooting. Remember, ABC is owned by Disney. The announcement came minutes after Nexstar Media, which owns dozens of ABC TV affiliates, said it would pull the show as it said Kimmel's remarks were offensive. Well, after the Fed rate cut, Bitcoin, well, it hit a near 1-month high. Investors are seeing the Fed's move as one that supports more risky assets. So you can see above $117,000 right now. Okay, let's get a final check on US futures. And stocks may have wobbled after that rate decision yesterday, but today futures are very much in the green. You see there the Dow up over 300 points and tech stocks also getting a bit of a lift. The Nasdaq there up over 1%. Let's have a quick look at European markets. We've got time. The Fed rate cut has really boosted markets over here as well, as you can see. Okay, I'm afraid that is all we have time for on Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.